Variable unit link. Do you already have one? Or should you really get one? Now in this video, we will discuss the pros and cons. So what are the negative sides and what are the positive sides of getting a variable unit link. So watch this video out. So before I proceed, please do like my Facebook page. It's Kevin Autea, financial planner and stock market investor. And this video, you can watch this one in YouTube. So please do subscribe on my YouTube channel for you to get updates about personal finance and stock market investing. So recently, I did a survey, or I asked questions to my subscribers, and fortunately I have a plenty of people who responded with their questions with regards to personal finance in general and again stock market. So I have here the request of Mr. John Costa. So John, if you're watching this video, is for you and for those everyone who can relate to the set topic about variable unit link. Let's define first what is variable unit link. VUL is basically a life insurance plan with an investment. That is the simplest term of it. Now let's define what is life insurance. According to Wikipedia, it is a contract between an insurance policy holder and an insurer or assurer, where the insurer promises to pay a designated beneficiary a sum of money in exchange for a premium upon the death of an insured person. Now, for the investment part, to invest is to allocate money in the expectation, again, that's expectation of some benefit in the future. You are expecting, but again, it's not guaranteed, di ba? May balik, pero hindi sure yung amount ng balik. Parang ganun siya kung i-explain natin. Okay, now let's go to the main topic, the pros and cons. Let me proceed first with the pros. I have five pros of getting a variable unit link. First of all, it has fixed premiums and guaranteed death benefits. Some policies, of course, doesn't have fixed premiums. It depends on their age. Like for example, for the term insurance, most of the insurance out there or other classification of insurance aside from variable unit link differs from age. So say for instance your age. So example, you're 20, you're 30, the amount varies from each other. But if you start investing on your age, say 25, then you are going 30s, 35, the amount will just be the same and the sum assured will just be the same. Flexibility in your policy or flexible policy. With that, it's because you can already add riders. So what are riders? What we simplify this one as a toppings on the pizza. Diba? If you order the pizza, you can be satisfied with the cheese and the tomato sauce itself. But the riders are the tomato, the ham, the bacon, and all of the toppings in a delicious pizza. So a rider, it's a additional payment or additional benefit to your typical investment and insurance VUL. So what are those? For example, accident, health, for health insurances, also for if you get confined, you can get some cash benefits and all the other stuffs. Next, it has future cash value. Having said that it has an investment aspect, the investment aspect will be based on you. Of course, we or me as a financial wealth coach, I will suggest which investment platform or which investment vehicle is suited for you. Of course, where will I base that? I will base that upon on my assessment on you. We call that risk assessment or risk profile questionnaire. Now, as for myself, I'm investing in the stock market. I have a broad idea about the stock, which I can explain it to you in detail and make you understand the importance of that one. And why is it really important that it is combined like variable unit link. Next, you can withdraw cash, okay, or what we call that policy loan. Of course, having said that it's your investment, you are setting aside money and you are investing your money. In the long run, let's say, for instance, after 10 years of paying, after 10 years, you will only leave your money. You have the option to leave your money there. You have a goal. You have a goal to use this one for your business. You have the goal to use this one for your retirement. So, if an emergency arises, then at least you know that you have a money on your VUL that you can withdraw. Then lastly, this is very important. VULs are tax-free. As here, in this video or in this clip, I'm showing you a clip right here from the page of FWD. As you can read here, it's really tax-free right there. Alright? Next, let's proceed to the cons. So what are the negative side of this one? By the way, I have 4. So the first one, investment risk. In opposite to the to the pros, of course, this one, you don't want to be at risk of your money. Of course, diba, you are saving your money for your future use. You don't want to risk it and you don't want it to depreciate in value. So that's the quite negative part of that one. But again, my promise to you as a stock market investor, I will explain it to you in the simplest form as possible and suggest what's the best for you. Next, it has higher cost. Comparing to other insurance, VUL has a bit of higher cost because it also has higher insurance charges. Next, it won't build big cash value. Comparing this investment into a typical mutual fund, of course, a typical mutual fund doesn't have charges, or maybe it has charge of 1 to 1.5% for the management fee. But for this one, if you're considering VUL as a pure investment, it may disappoint you a little because of the, again, from the previous example, it has higher charges. So the first few years of paying, you will be deducted a bigger amount of money as a result of the insurance charges, and it will reflect on your investment on the first few years. That will be on the first few years only, but on the succeeding years, it will be 100% of your money that will be in your investment. So if you are a more technical person, I have encountered clients like that they'd rather use mutual fund than VUL because, hey Kevin, at this 10th year, at this 15th year, you can see that it's really bigger here in mutual fund, but it's really smaller in VUL. But what do I do with that? I turn back, or I ask back the question to them. I ask them, sir, you are already investing in mutual fund. What if something happens to you? Can you withdraw the mutual fund? Or can we just start with a little of something in your VUL, then if you have an extra, start with a mutual fund? That's the answer for that one. Lastly, number 4, it's a bit complicated because of the added features. Compared to a more typical insurance, it's typically you pay something and you get an insurance or a death benefit. With this one, you have an investment, you have a rider. It's quite complicated to understand. But again, that's the role of us financial wealth coaches to give you the importance of that one that must be understood by you, and we need to collaborate and help each other. Now, to sum this one up, let me just sum this one with 3 factors, or why should you get a VUL now. First of all, if you are newly employed or first-time earner, like me, I would just like to share your story. Like me, the first time I graduated from the school and applied for a construction company, the first thing that I do is think of ways on how I can save money. At first, I started with mutual funds, but then I realized that yeah, it's really important to have VUL as young as I am today. So I am saving a small chunk of money with a much bigger value in return than to save it in a later part. That's why also I added an extra income for me to have more savings, more money to save and invest in mutual funds or stocks. My goal here is that, like, not unlike most people, they will consider getting VUL when they are married or when they have family. So that's the time that the liabilities have already increased, not comparing to your age today. Maybe some of you of what are watching who are only 20s, 30s, who has lesser liabilities. You must get something, or you must get one now. Number two, starting a family. Like what I've said, starting a family comprises of education, of course, house, medical expenses, and retirement. Education for your kids, house for your family, medication, this is for everyone, for you and your spouse and for your kids. And lastly, retirement. Of course, you don't want to invest in your children and treat them as your retirement. Then lastly, number three, this one's for entrepreneurs and for business owners, business people. You can use this one as a collateral or as a support, as a asset protection for your business. Also, it can be an investment to your employees. It can serve as an added benefit to your employees to make them feel loved, make them feel appreciated. That there are some programs that we do that employees and business owners collaborate to get something for you as employees and for you as a entrepreneur or business owner. It must be a win-win situation. So again, that's quite a long video, but I hope you found value in that one, the pros and the cons. In any aspect, maybe it can be business, career path, investment, there are really pros and cons, risk and reward. So you just need to analyze them, understand them, and weigh the situations, or analyze also what's your current need for today. Say for instance, you already have one insurance or VUL, but you have 4 kids, growing family, still have liabilities in your house, in your car, then you're only covered for 1 or 1.5 million. Do you think that will be enough? So those are the factors that we need to consider. And those are the things that I discussed during the financial wealth coaching that I'm doing in my clients. So you can check my Facebook page. I have updated my cover photo. You can see a lot of clients out there. And you can check the link below in the description for you to chat me and let's talk. It's easier to help you if I get to know you more. I won't sell anything or I won't promote anything. It's just me to getting to know you more. So that's it. I hope you found value in this video. Again, the purpose of me doing this video is for you to make the most out of your money. Make the most meaning, if you are saving in the bank, you only get point something of savings. You will use that in your future. If you save in variable unit link, you hit 2 birds in 1 stone. Alright? I mean 3. You save, you invest, and you protect yourself. Think of that as a big advantage. So that's what I'm pointing out here. Make the most out of your money. Alright? And for you to make responsible choices today. I hope after watching this video, find time to analyze. After this pandemic, message me, find time to save. Let's draw a plan for you. What's the best plan so you can start right away without compromising your needs and your wants as well. So again, please do subscribe on my YouTube channel. And that's it. Thank you for watching.